Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this range over here where we are then looking for a wave WXY to the downside with W a zigzag, X a triangle, and then wave Y either a flat or also a triangle. Inside wave X, we are then looking for this to be a wave A, B, C, D, and E, where the most common target area for D is between the golden pocket and the 786, taken from the low of B to the high of C, giving us a target area between 43.2K and 42.8K. In this scenario, you then want to see a zigzag structure to the upside to finish E, after which we then want to see continuation to the downside. Now it is important in triangles that 4 out of the 5 waves are zigzag structures, so a simple zigzag up or a simple zigzag down, 535 ABCs, where only one of the waves can then be complex, and usually that is wave C or wave D, within this scenario preferably wave C here being the more complex structure, after which we now expect simple zigzags to the downside in a D and then to the upside in a wave E. If we then look at how that WXY scenario fits in the bigger picture, then we could have the end of a wave 5 here after we had an expanding diagonal, which is rare, it is uncommon, so that's something that lowers the probabilities a bit, but then we could have a beginning move to the downside which is corrective, and then a WXY which then fits a bigger corrective structure that is then yet to come. If we look at this second scenario here, then we are also looking for a triangle, but now this, instead of a wave W, is a wave A to the downside, followed by wave B, C, D, and then again wave E with the same target area. In this case, however, you want to then see continuation to the upside instead of a move up and a move down in the previous scenario that I have shown, this one over here, to finish your wave X. So that is the main difference between the two. Target area is the same. Invalidation is price moving below the low of this wave C here, as wave E is not allowed to move below wave C. Now this scenario here in the bigger picture could fit a potential bullish scenario where we then have a wave W in a flat X complex structure and then wave Y a triangle in that A, B, C, D, E, and then continuation to the upside. The only thing that lowers the probabilities here is time, because this wave 4 will then end between the 5 and the 6 fifth time of wave 2, meaning this green wave 4 is 5 to 6 times longer in time than the wave 2 down there at about like 25, 26, 27K, which is very uncommon for a wave 4 to be this much longer. So it does lower the probabilities a little bit, and after wave 4 you then want to see a wave 5 to the upside moving towards that 50K. Because the probabilities for that particular scenario are lower because of time, we have to consider a bigger sideways structure, a bigger range to come if price continues ranging here for much longer time. So in this case, we could have a potential A or W forming here, followed by a B or X, and then another C or Y, where we are looking for a much bigger three-wave structure where you can see the target down here between 40K and 34.8K, taken from the low of 2 to the high of 3 for this bigger wave 4. So we then get a complex structure in a wave 4, invalidation 32.4K, but then we still get another move to the upside in a wave 5. A few scenarios that I just like to show you but do not have the highest probability is this diagonal here. First of all, it's way too early to call diagonals, but most importantly for me is actually the 0.7 here. In a diagonal, in this case, we are looking for all waves to be a zigzag structure. Zigzag in 1, zigzag in 2, and then you want to see a zigzag in 3, or at least a zigzag family pattern, like a double zigzag, for example. Now, we could have a zigzag here to the downside. That looks quite probable. However, having another zigzag to the downside here is lower probability because of the 0.7 being hit. And the 0.7 is not really a target you want to see for a wave X in a double zigzag. Wave W, zigzag, X, and then a wave Y, zigzag to the downside. The 0.7 really lowers the probabilities for a double zigzag. So therefore, this scenario in general has some lower probabilities. The second one has the same problem here. This is a bigger triangle, right? Where we then have A, B, double zigzag, and C, D, E. But then again, the 0.7 is hit. That does lower the probabilities a bit for this scenario as well. And then in this lower probability scenario, we are looking for an impulse to the downside. But this impulse has a truncated wave 5 and then a 1, 2, 3, 4, 5 with wave 5 ending above wave 3, which is very, very rare. And this then follows the expanding structure that we have to finish then a wave 5 here as well. So you have an expanding diagonal in 5, which already is lower probabilities, followed by a truncated wave 1, which also really lowers the probabilities because both are very, very rare. Now, if we look at this range, then we simply continue this range over here, right? Up, down, up, down, up, down. We currently have been testing once more the white box. As you can see over here, no candles closing above this white box between 44K and 44.4K. If price can close candles above this area over here, maybe retest the support, probabilities will surely increase for a move to the upside, looking for that yearly and that daily level over here. But losing the point of control does increase probabilities as well to just continue the range and look for price to move towards the downside. So therefore, if we are looking at the probabilities of the different scenarios, then we are looking for a continuation of the range as well as a move to the downside, because we then have the probabilities here for a WXY or a triangle scenario where we are looking for price to move towards the downside in both of these. However, there is of course the potential also with these scenarios that we are going to visit lower prices, right? All of the scenarios at the moment are hinting or at least flirting with a move towards the downside, and it's very difficult to come up with any scenarios here that would lead for new highs to come very soon. So unless price can reach the white box and flip it into support, all of the scenarios are pretty much looking for a move to the downside or a continuation of the range. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.